Okay, so let's dive into all this research you've given us about emerging markets.
Yeah.
We've got articles and videos and even some deep analyst reports.
hmm
It feels like you're really trying to look beyond just the headlines here.
Well, yeah, I'm trying to figure out, if this emerging markets hype is real and if now is the time to get in on it.
Okay, so some of these sources you sent us are really bullish.
Right.
They're talking about all these economies are just booming.
Yeah.
But then some of the others are saying that emerging markets have really underperformed over the last decade.
Yeah, it's a bit of a puzzle.
It is a bit of a puzzle.
Yeah.
So I think our mission for this deep dive is to kind of figure out what's really going on.
Right.
Are there hidden opportunities here?
Absolutely.
And what risks might we be missing?
Yeah, and I think we should start by defining what we mean by emerging markets.
Okay, yeah, back to basics.
Yeah.
What are we talking about when we say emerging markets?
So essentially we're talking about countries that are transitioning from low-income agricultural societies to more industrialized economies.
Okay.
They typically have rapid growth rates,
Yeah.
expanding middle classes,
Right.
increasing urbanization.
So a lot of potential,
Yeah,
but also a lot of change and perhaps instability as well.
exactly. And that's the double-edged sword of emerging markets.
Right.
They offer the allure of high growth potential, but also carry much higher risks than, say, investing in the US or Europe.
Okay, so high risk, high reward.
Right.
But, one of the things that our sources really emphasize is this idea of capital rotation
Yeah.
and the Fed's role in all of this.
Absolutely.
Can you kind of unpack that for us?
So capital rotation is essentially the flow of investment money moving from one asset class to another. When the U.S. Federal Reserve tightens financial conditions, like raising interest rates,
Yeah.
investors often pull money out of riskier assets,
Like emerging markets.
like emerging markets, and put it in safer U.S. assets.
So the U.S. becomes a giant magnet for capital when things get uncertain.
In a way, yes. And this creates both a challenge and an opportunity for emerging markets.
Okay, so I see the challenge, right?
Yeah.
They're losing investment capital.
They are.
But how does this create an opportunity?
So imagine you're at a market and suddenly the price of your favorite fruit drops
Okay.
because the vendor needs to sell quickly.
Yeah.
That's an opportunity to get a good deal, right?
Mm-hmm.
Similarly, when capital flows out of emerging markets, asset prices become more attractive, potentially creating buying opportunities for savvy investors.
I love a good market analogy.
Yeah.
But what's fascinating to me is that some of our sources point out that some emerging market policymakers are kind of just taking this wait-and-see approach, almost like they're frozen by the Fed's actions.
One analyst even used the phrase deer in the headlights to describe this cautious stance.
Oh, wow.
Some policymakers are hesitant to adjust their own monetary policies until they have more clarity on the Fed's future moves.
Okay, frozen by uncertainty, that makes sense.
Yeah.
But, if the U.S. is sucking up all the investment oxygen,
Right.
are there any emerging markets that are still worth looking at?
Absolutely. Not all emerging markets are created equal.
Yeah, wait.
Some are weathering the storm far better than others.
Right.
India and China in particular are still considered to be emerging market stars.
Let's start with China, because it's kind of it's an elephant in the room. A lot of our sources are saying that China's best days are kind of behind it.
Right.
How would you counter that argument?
So it's true that China's growth has slowed and the aging population presents a challenge.
Yeah.
But even with a projected growth rate of around 3.5%, it's still a major engine of the global economy. And China is strategically pivoting towards domestic consumption and high-tech industries,
Okay.
which presents a different kind of opportunity than its previous export-driven growth model.
So it's not just about cheap manufacturing anymore.
Exactly. China is making a concerted effort to move up the value chain. And for long-term investors, this transition could be quite profitable.
Interesting. And what about India?
India is a different story. It boasts a young and vibrant population and a rapidly expanding middle class.
Okay.
The expected growth rate of over 6% is fueled by both domestic consumption and increased investment in infrastructure and technology.
So China's playing the long game with its strategic shift,
Right.
while India's got this youthful energy kind of propelling its growth.
Yeah,
That's a fascinating contrast.
it is, and it highlights the importance of looking beyond the generalized term emerging markets and understanding the unique dynamics of each country.
So even with the Fed kind of pulling on those capital strings,
Yeah,
there are still individual countries with promising stories.
absolutely.
But our sources also delve into some specific investment opportunities.
Right.
within these markets. So we're talking about stocks and real estate, ETFs, even crypto. Where should we start unpacking all that?
Let's start with some individual stock examples, as those can really bring these abstract concepts to life.
All right, let's hear about some of these potential hidden gems.
One that stands out is Halyk Bank in Kazakhstan.
Oh?
It's the country's largest bank, and the numbers are impressive. A 33% equity growth rate,
Wow.
16% dividend yield,
Yeah.
and a low price-to-book ratio.
High growth and dividends. That sounds almost too good to be true.
It's certainly compelling, but as we discussed earlier, high reward often comes with high risk.
Right.
It's crucial to understand the specific risks associated with any investment, especially in emerging markets.
So don't let those impressive figures completely overshadow the need for due diligence.
Right.
What other intriguing stocks did our research uncover?
Another interesting prospect is TBC Bank in Georgia.
Okay.
Their exposure to Uzbekistan's rapidly growing economy is a major plus,
Yeah.
but there are geopolitical risks to consider.
Yeah, Georgia has seen some political upheaval recently, right?
Yeah.
So potential upside from Uzbek growth, but potential downside from political instability.
Exactly, and that's why diversification is essential when investing in emerging markets.
Right.
You shouldn't put all your eggs in one basket.
Okay.
Spread your risk across different countries and sectors to mitigate the impact of any single event.
Spread the potential rewards make sense. Any other stock picks that caught your eye?
One more worth mentioning is Ecopetrol in Colombia.
Okay.
It's a hydrocarbon giant with a high dividend yield. But its future prospects are heavily dependent on the upcoming elections and potential economic reforms.
So a bet on Colombia's political future.
Right.
And to some extent, the global energy landscape, it seems like investing in emerging markets often requires looking beyond just the financials and considering the broader context.
You're absolutely right. Factors like demographics, technological advancements, governance, and even cultural trends play a crucial role in shaping the investment landscape of emerging markets. It's a much more nuanced picture than simply looking at a company's PE ratio.
It sounds like we need to approach these markets like a detective piecing together clues from all these different areas.
Yeah.
But those specific stock picks are a great starting point. What about broader investment options like ETFs?
ETFs are a great way to get diversified exposure to emerging markets.
Okay.
They offer a basket of stocks, allowing you to invest in an entire region or sector with a single purchase, which can help manage risk.
So instant diversification.
Yeah.
Any particular ETFs worth highlighting?
Our sources mention a few popular ones: the iShares MSCI Emerging Markets Index Fund, EEM.
Okay.
The iShares Core MSCI Emerging Markets ETF, IEMG. And the Vanguard FTSE Emerging Markets ETF, VWO.
Those are some mouthful names.
They are.
But it sounds like a good starting point for someone looking for broad exposure. And of course, our sources also mention real estate. I mean, we heard that anecdote about land values skyrocketing in Cambodia.
Yeah, real estate can be a compelling way to participate in a country's growth story, but it's important to remember that it's illiquid and comes with its own set of risks. You need to thoroughly research the local market, understand property laws, and be prepared for potential currency fluctuations.
Right. No investment is without its risks. But that's why we do these deep dives.
Exactly.
To uncover both the hidden opportunities and the potential pitfalls.
Yeah.
Speaking of pitfalls, what are some of the big risks our sources are warning about?
Well, as we discussed, a strong U.S. dollar and rising interest rates can create significant headwinds for emerging markets, putting downward pressure on asset prices.
It's like a tug-of-war for global capital.
Right.
And right now, the U.S. is winning.
A very apt analogy.
And beyond macroeconomic factors.
Right.
You know, political instability, regulatory hurdles, geopolitical uncertainties always loom over these markets.
Yeah, those are the wild card factors that are tough to predict.
Yeah, one day everything's fine. The next day there's a political crisis or war breaks out, and your investments are suddenly at risk.
Unfortunately, that's a very real risk. Our sources highlight the experience of investors in Russia who face substantial losses due to geopolitical events. It's a stark reminder of the importance of careful risk assessment and not letting potential returns completely cloud your judgment.
Definitely a sobering reminder. So we've covered the allure of emerging markets.
Yeah.
Some specific opportunities and some of the key risks. But with all as a complexity, how should someone actually approach investing in this space? It all feels a bit overwhelming.
It's definitely not a set it and forget it type of investment. You need a thoughtful strategy.
So what does a good emerging market strategy look like? What are sources recommending?
One common approach is to take a thematic and opportunistic approach.
Okay.
Instead of trying to time the market or pick individual winners,
Mm-hmm.
focus on specific sectors and countries that align with your investment goals and risk tolerance.
So identify the trends that you believe in,
Yeah,
the countries that you're bullish on, and then find the investments that fit within that framework.
precisely. And remember, don't just rely on traditional financial metrics.
Okay.
Dig deeper, consider factors like demographics,
Yeah.
technological advancements,
Right.
governance, and even cultural shifts.
So get a feel for the whole picture,
Mm-hmm.
not just the numbers on a spreadsheet.
Yeah.
I like it.
Yeah.
But how does someone actually gain that kind of deep understanding?
It does require effort, but it's incredibly rewarding. Stay informed.
Okay.
Read industry reports, follow expert analysis, and diversify your sources of information.
Mhm.
Don't just listen to one voice. Get a range of perspectives to get a truly informed view.
Multiple perspectives, always a good idea.
Yeah.
But what about those investors who are looking for even more alternative ways to play emerging markets?
Right?
Our research mentioned cryptocurrencies and even some, shall we say, unconventional financial systems.
Yes, the world of crypto and informal economies. In some emerging markets, cryptocurrencies like Bitcoin are seen as a way to bypass capital controls and access alternative currencies,
Mhm.
especially in countries with volatile or unstable local currencies.
So Bitcoin as a safe haven in a storm, kind of ironic considering how volatile crypto can be.
Yeah.
But it speaks to the ingenuity that often arises in these markets. And our sources also mention Hawala, right?
Exactly.
That ancient system of transferring money.
Hawala and other informal transfer systems highlight the adaptability and resourcefulness of emerging market economies.
Right.
Even when traditional financial systems are lacking, people find a way.
It's a testament to the entrepreneurial spirit that thrives in many of these markets.
Absolutely.
Okay, we've covered a lot of ground here, but I have one final big picture question. What's the future of emerging markets?
Yeah.
Will they continue to rise or will they stumble?
The future of emerging markets is undeniably intertwined with the evolving global landscape.
Hmm.
While challenges exist, the long-term prospects remain positive.
So despite the risks and the volatility, there's still reason to be optimistic.
Absolutely. A growing middle class and rising consumer spending are key drivers of future growth. And as emerging markets continue to develop and gain economic power, their influence in global affairs will only increase.
It's like a whole new world order is taking shape right before our eyes.
Indeed, and that's why it's crucial to stay informed, adapt to the evolving landscape, and be prepared to seize the opportunities as they arise.
All right, so emerging markets are definitely not a set it and forget it investment.
Absolutely not.
You have to think critically about which countries,
Right.
which sectors,
Yeah.
and what kind of investment strategy fits your risk tolerance. This isn't a one-size-fits-all approach.
Definitely not. You really have to do your research.
Exactly. You've got to do your homework and be prepared to adapt as the global landscape shifts. But beyond just the numbers, you've really emphasized the importance of understanding the broader context, the cultural shifts, the political dynamics.
Emerging markets are not just about financial metrics. They are about people, cultures, and societies undergoing profound transformations.
That's a great point. We've talked a lot about the economic side, but what about the cultural impact? How will the rise of emerging markets reshape global trends and redefine what it means to be developed?
That is a fascinating question to ponder.
And a perfect place to pick up in part 2.
It really is. As emerging markets gain economic clout, their values, ideas, and cultural expressions will inevitably influence the global stage, leading to a more diverse and interconnected world.
So it's not just about economic opportunity. It's about understanding how the world itself is changing and where the centers of power and influence are shifting.
Precisely. And for investors, that means recognizing that the old playbook might not be relevant anymore. The assumptions about risk and reward are evolving.
Okay, so how should we be thinking differently about emerging markets? What are some concrete steps we could take to get ahead of the curves, so to speak?
The first step is to broaden our horizons.
Yeah.
Don't be afraid to venture beyond the familiar.
Yeah. That's easier said than done, though, especially when the news is filled with talk of global uncertainty and geopolitical risks. It can feel a bit daunting.
I understand the hesitation, but that's precisely why it's crucial to look beyond the headlines and delve deeper. Don't just write off entire regions based on fear or generalizations. Each market, each country has its own unique story, its own strengths and weaknesses.
So how do we sift through all the information and find those hidden gems, the markets that are truly poised for growth?
One approach is to focus on thematic investing. Identify the mega trends that are shaping the future, things like demographics, technological innovation, and sustainability, and then find the countries and companies that are best positioned to benefit.
So if you're bullish on, say, the rise of renewable energy,
Yeah.
you might look at emerging markets that are investing heavily in solar or wind power.
Exactly. You're essentially betting on the trend, not necessarily trying to pick individual winners. It's like the old saying about the gold rush: invest in the picks and shovels, the tools that everyone needs, rather than trying to guess which miner will strike it rich.
That's a great analogy. It takes some of the pressure off trying to be a stock-picking genius.
Exactly. And this brings us to another crucial point. Look beyond traditional investment vehicles. Stocks, bonds, and real estate are still important, but they're not the only game in town, especially when it comes to emerging markets.
So what other options are there? We touched on cryptocurrencies earlier, but what else should we be exploring?
Venture capital is one avenue. Investing in startups in emerging markets can offer tremendous upside potential. You're getting in on the ground floor of potentially world-changing companies.
Sounds exciting, but also incredibly risky. Wouldn't that require a lot of specialized knowledge and connections?
It can, but there are also funds and platforms that allow individual investors to participate in venture capital investments, spreading the risk and providing access to expertise.
So there are ways to dip your toes into the venture capital waters, even if you're not a Silicon Valley insider.
Absolutely. And then there's impact investing, which focuses on supporting businesses and projects that are addressing social or environmental challenges.
So doing good while potentially doing well, that has a nice ring to it.
It does, and impact investing is becoming increasingly popular, especially among younger generations who want their investments to align with their values. They want to be part of the solution, not the problem.
It's fascinating how investing is evolving beyond just pure profit. It's becoming more about shaping a better future.
And that's one of the most exciting things about emerging markets. They offer not just the potential for financial returns, but also the opportunity to be part of a positive transformation.
So we're not just investing in emerging markets, we're investing with them, helping to build a more sustainable and equitable world.
I like that way of putting it. And that brings us back to something we touched on earlier, the cultural impact of these rising economies. It's not just about numbers and spreadsheets. It's about understanding the people and cultures that are driving these changes.
Right, we can't just look at emerging markets through a purely economic lens. We have to consider their cultural influence as well.
As these economies gain power, they'll also gain influence shaping global trends in everything from fashion and music to art and cuisine.
So get ready for a world where Bollywood is as big as Hollywood and K-pop dominates the airwaves. It's not just about economics, it's about how we experience the world.
The world is becoming a richer and more vibrant tapestry, and that's something to celebrate, not fear.
I love that image of vibrant tapestry. It's a reminder that investing in emerging markets isn't just about chasing returns. It's about understanding and appreciating the diverse cultures and perspectives that are shaping our world.
And that understanding can lead to greater insights and opportunities. When we open ourselves to new ways of thinking and seeing the world, we expand our possibilities.
So don't just read the financial statements. Read the novels. Watch the films. Listen to the music.
Immerse yourself in the culture. That's how you truly grasp the nuances and complexities of a market.
It's like we're back in college, but instead of cramming for exams, we're exploring fascinating cultures and uncovering hidden investment gems.
And who knows, maybe we'll learn a thing or two about ourselves along the way.
Now that's an investment worth making.
Yeah.
But with all this talk of exploration and discovery, it's important to remember that navigating these markets can feel like trying to find your way through a jungle. It can be overwhelming, right? So many paths to choose from, so many potential pitfalls. How do we avoid getting lost in the undergrowth?
That's where the real work begins. It's not just about having a sense of adventure. It's about being prepared, having the right tools, and knowing how to use them.
Okay, so what are the essential tools for navigating these markets? Our research touched on the importance of reliable information, but with so much data out there, how do we even know where to start?
Yeah, in this age of information overload, it's more crucial than ever to be discerning about your sources. Not all information is created equal, especially when it comes to emerging markets.
So how do we separate the signal from the noise? There's a lot of hype out there and a lot of promises of quick riches.
Yeah, you hit the nail on the head. Be wary of anyone claiming to have all the answers or offering guaranteed returns. Start by looking for sources known for their credibility and objectivity. Seek out diverse perspectives, both bullish and bearish, to get a balanced view.
So no gurus or crystal balls.
Right.
Just good old-fashioned research and critical thinking.
Exactly. Don't be afraid to ask questions, challenge assumptions, and dig deeper into the data. Don't be swayed by emotional appeals or get-rich-quick schemes. Those rarely end well.
So it's like being a detective,
Yeah,
piecing together clues, looking for inconsistencies, and always questioning the narrative.
I like that analogy. A successful emerging markets investor is part analyst, part anthropologist, and part detective.
Uh-huh.
You need to understand the numbers, the culture, and the motivations behind the trends.
It's about connecting the dots, seeing the bigger picture.
Precisely. And that requires a multifaceted approach drawing on insights from economics, politics, history, and even cultural trends.
Okay, so we've talked about the importance of reliable information, but what about the emotional side of investing? These markets can be volatile. How do we stay grounded and avoid making impulsive decisions based on fear or greed?
That's where having a clear investment strategy comes in. Before you even think about specific investments, define your goals, assess your risk tolerance, and create a plan that you can stick to even when the market gets turbulent.
So don't panic and sell when the market dips or chase the latest hot stock when everyone's getting excited.
Exactly. It's about discipline and patience. Emerging markets are a long-term game. The real rewards come to those who can ride out the storms and stay focused on the horizon.
Speaking of the horizon, let's zoom out for a moment and consider the big picture. How do you see the role of emerging markets evolving in the coming decades? What are some key trends that will shape their future?
Well, one of the most significant trends is the rise of the global middle class. Hundreds of millions of people in emerging markets are moving out of poverty and into the middle class, and their consumption patterns will transform the global economy.
So more demand for goods and services, more investment opportunities, more economic power.
Precisely, this shift in consumption patterns will also drive innovation. Emerging markets are already leading in areas like mobile payments, e-commerce, and renewable energy.
It seems like they're not content with following the established playbook. They're writing their own rules now.
That's a great way to put it, and as their technological capabilities advance, we can expect even more disruptive innovations coming from these markets.
It's exciting to think about the possibilities, but with all this growth and change, there will inevitably be challenges along the way.
Of course, emerging markets still grapple with poverty, inequality, and political instability, and the transition to a more sustainable and inclusive growth model won't be easy.
So it's not all sunshine and rainbows. There's still real risks and obstacles to overcome.
Definitely. But these challenges also present opportunities for investors willing to take on a bit more risk. There are potentially huge rewards to be found in helping emerging markets address these issues.
So it's about finding the companies and projects that are making a positive impact, not just chasing short-term profits.
Exactly. And that's where the intersection of finance and social impact becomes truly powerful. We can invest in these markets in a way that benefits both our portfolios and the world around us.
That's a compelling vision. It aligns perfectly with our mission here at the Deep Dive to help you, our listener, become more informed, more engaged, and more empowered in your investment journey.
We've explored the allure of emerging markets, the potential pitfalls, and the strategies for success. But the most important takeaway is this: emerging markets are not just an asset class. They are a story unfolding.
It's a story full of twists and turns, triumphs and setbacks, and ultimately the potential for extraordinary growth and transformation.
And by engaging with that story, by learning, exploring, and adapting, you can position yourself to not just participate in that growth, but to help shape it.
So to our listener, as you embark on your deep dive into these markets, remember to be curious, be critical, be patient, and most importantly, be open to the unexpected.
The world is changing faster than ever, and emerging markets are at the forefront of that change. By embracing the complexity, the challenges, and the possibilities, you can unlock a world of opportunity.
Go forth, explore, invest wisely, and help write the next chapter in the emerging market story.
And who knows, maybe you'll even discover a hidden gem or two along the way.
Until next time, happy investing.